David here, weekly wheat report. Today is Friday, 17th of August, 5:40 in the evening. Looking at the the November contract 2018. Markets closed. We've got the yearly chart with monthly candles in front of us. Just move a mouse over here. You can see where we are here, 189 at close tonight. We run the mouse across the left here. You can see the previous high here was back in 2007, and we had one back in 2011. Trend is well and truly up. We've got 4 big green candles. We're forming a 5th one at the present moment. No change in the trend at the present moment. Yes, we are stalling a bit at the moment. Let's pop down into the Report.17.8.18, see what's happening. Right, what we've got at the moment is we've got a high, swing high here. 198 was the high that we got to. Well, this spike up here. We've now set a low down here, and that came in at £180.78. So basically, we can identify that we're key levels are the whole numbers of 190, 180, and 200. So what can we see on this chart? We've got a gap here. That hasn't been filled at the moment, and we've had 1, 2, 3, 4, 5 days below the gap at the present moment. That I would take as a bearish signal. We haven't regained the moving average 10 period at the present moment, so that would be a negative at the present moment. So where do we go from here? Now, if I bring up the past, just bring this up in front of you, see what I've got here at the moment. On the left here, I've got a chart of 2007, and on the right here, we've got our chart of the current year at the moment, 2018. Now, in 2007, we reached a high of 198. Now, that's spooky. And in 2018, we reached a high of 198. In 2007, we then fell to a low of 170. So that's where the whole numbers come in again. And we had a gap. So the gap came in at 190. That is precisely the same area that we've had this gap at the moment. So let's tick these off. So we've got a high, we've got a low. So we formed an A. We formed a down wave after having an up move, right? What we can say now, we're looking for B. B is where the importance is. At the moment, that came in 2007 at 184, and that was 50% of the move down. At the moment, the 50% line comes in around, I'll get this right, 188.90. And where do we close tonight? We closed at 188.90. So if we've now got to see whether there's enough momentum for the market to go up and test this gap on Monday at 190, fill the gap, and then push on up. Let's go down into the actual chart we'll show you on here. So looking here, we look for this market push up, where I'm moving my mouse at the moment, fill this gap and form a B, and then we could see this final move where it comes down, drops through A, and we capitulate, or we then go back up, retake the 10-day moving average, fill the gap, and we head on up to test the swing high at 198, and we hit the 200. At the moment, you've got to go with the trend, and the trend is up. So therefore, I would say it's not all over yet. We still need this market to test this gap and see what happens then. I've got no way of telling at the present moment what's going to happen. The price will determine this, whether we break through the 190 or not. Or the other scenario is it fails completely and we just backfill and we go sideways. So we've got 3 options at the moment. One is that we fail at this gap and then head back down to test A again, back at 180. 2, we go up and break through the 10-day moving average on Monday, gap fill, we go up to the swing high and hit 200. Or we just go sideways. And that really is as plain as I can say at the present moment. In the short term, it's still a good selling opportunity while we've still got this gap and this swing high possibly here at the moment. The longer term trend is not affected until we get down below A below 180, and even still we've got to go down to test 170. So there's plenty of safety at the present moment, but all we're doing is backfilling at the present moment, and we need for the market to make its mind up for the next direction, which we'll see next week. And thank you for watching, and I'll put an update this time next week. Thank you.